some of you have come to our comment section. Some of you are asking questions, and one question that keeps recurring is, I'm a trader. I buy and sell, possibly at Odumabo, Idumota, Ejiosho, Alaba, and you are a petty trader in the sense. And you are saying, what is my tax liability? How do I calculate it? Now, that one is simple. One thing that this tax system will teach us is how to keep records. I've talked about making sure you put narration whenever you do money transfer or whenever you pay somebody, so that if there is a need to query your account, it will be seen clearly what it's meant for. So everybody must learn how to keep records if you will not pay beyond what you're supposed to pay. There is need for elementary knowledge of bookkeeping. It's not difficult. Even an illiterate can keep books. What does it mean? Here is my income. Here is my expenditure. If I had those two things, I can prepare an account for you. And anybody can who understands accounting. So you need to keep record. When you keep your record, put in every income, every expenditure related to the business, particularly income of sales. And of course, the expenditure. It will leave you with a bottom line that is called profits. It is on that profit that you'll be taxed. That is how simple it is. And I don't think anybody can do it. So there is need to keep records henceforth. The next group of people, not the petty traders, are people who run limited liability companies, the one you call LTD, or the business ventures. They fall into another class because they are supposed to file returns every year to CAC. Those ones, their case is different. Most of them employ accountants, bookkeepers to keep their record for them. They will keep the record properly. It's also the bottom line that is taxable within a threshold that is allowed. So I don't think it should be a big issue. It could look big because before now you have not been doing it. But the moment you begin to do it, you discover how simple they are. Now, there are obvious advantages when you're operating with a limited liability company as a name. Most of the expenditures you make could hide under the company. It's not against the legal system. It's not against the tax system. You can put it there. Now, what is limited liability company in the first sense? It's an addition to you. Limited liability is that in the eventuality of the collapse of the company, your liability is limited to the investment you made. That's your capital. Except if it is discovered later that you were fraudulent with it. There's something we call lift the veil of incorporation. And when we lift the veil, we now say, oh, you are the one in the veil. You are the one that is covered. But when it gets to lifting the veil, a lot has happened. It won't get there. Now, what is the main issue about using company to operate? First of all, you need to know that a company is a legal entity. It's an official person. It has a distinct name. It has perpetual succession. It has a distinct name from you, the founder, even though you may be the founder chairman. So it's a different company. Now, when you work in the company, even though you own it, you are considered an employee of the company. In your accounting system, for the purpose of tax, you pay yourself a salary. When you pay yourself a salary, pick up all expenditures, your office rent, your every expenditure, the bottom line comes a profit. It is that profit and portion of that profit that you get a dividend. It's that dividend that you pay tax on. There are two taxes now involved. If you receive the salary, you pay PAYEE. PAYEE belongs to the state government. Withholding tax belongs to federal government because it is part of the profit of the day. Again, if you have made a profit beyond the threshold, you pay corporate income tax. I've identified 3 different types of taxes that are involved when you operate with a limited liability company. Number 1, you and every staff in your employment will pay PAYEE. Pay as you earn belongs to the state government. Number 2, when dividend is declared, there is a withholding tax that goes to the coffers of the federal government. It's a tax. Number 3, there is a corporate income tax that is also due to the federal government. These taxes are compulsory. You will have to pay them particularly if you made the money to help you pay them. I don't think it's a confusing thing. These three taxes are due. And of course, certain expenditures are vatable. VAT, when paid, also goes to federal government. So I have identified on the whole 4 different taxes that a corporate body is entitled to pay on behalf of the staff, on behalf of the federal government, even the state government. Now, if anything is not clear to you, please ask again at the comment section. We'll be able to explain to you further. Keep your records. One thing, again, we repeat, is that there is need to keep proper records of your income and expenditure, such that if the taxman asks you, you tell him, you give him, you supply him. Of course, the taxman will be satisfied when he sees that you have kept proper record. It's not difficult to do. Thank you.